The American author Ralph Waldo Emerson said, "The desire of gold is not for gold, it's for the means of freedom and benefit, not just for gold itself." That means gold is for, as we are all the time telling our investors, gold is for wealth preservation. That is freedom. We are now entering an era when the financial system and the monetary system are going to implode. Whether that happens in the next few years or it takes longer, it doesn't matter. The time is right now to ensure your wealth or whatever savings you have. And the best means of doing that, as Emerson said, gold is for freedom. It means you hold gold in physical form, stored outside the banking system in a safe jurisdiction, and you don't worry about it thereafter. You don't look at the price. You don't look at the fluctuations. You just know that you are going to have life insurance here that will last for you and for your family. Gold is not for investment. It's for financial insurance against a broken financial system. We are in the next few years, maybe longer, we're going to see the financial system and the currency system coming to an end. We have seen a steady period of decline since 1971 of all currencies. They are all now down by 99% in real terms, which is against gold. Remember, we have only 1% to go, but that 1% is 100% from here. And this is what we're going to see in the next few years, whatever time it takes. This is why you cannot protect your wealth in paper money or in paper assets. You have to have insurance in the form of physical gold and hold it safely outside a fragile banking system. Throughout history, every single currency has gone to zero. This is without exception for not just hundreds of years, but even thousands of years. That means if you hold anything which is not real money, if you hold paper money or let us say silver that started with 100% silver, like in the Roman times, and then went down to virtually 0% silver, that is also a form of fiat money or even fake money. So hold the real asset, that is gold and some silver, and store it safely outside the financial system. There's no use holding your gold in paper form or holding it within the financial system, because that is the system you're protecting against. You therefore must hold it in a way that only you have access to it and only you can actually go and see your gold and sell it if you need to. Therefore, you should also keep it outside jurisdictions which could potentially take your gold away from you. For example, any nation under pressure now financially, like the US, with massive debts, massive balance of payment problems, it is not impossible that in the near term or in the next year or two, whatever period it is, the US will implement capital controls. That means that you will not at that point be able to transfer your money out of the US. So now, while there is still freedom of moving capital to better jurisdictions, then you should do that. I would move it out of the EU, also to Switzerland or Singapore. And I know if the crisis comes, at least I can flee to my gold, because it cannot be confiscated by countries who are more likely to actually take your gold away from you. Many people argue that what's the purpose of gold? It doesn't pay any return and it doesn't go up in value. Well, over the years, measured against paper money, gold has always gone up substantially. But that actually is the wrong way of looking at gold. Gold is not going up. Gold is going sideways. And it's the fiat money, paper currencies that are going down by the day. And if you measure gold against these currencies, gold obviously goes up. But look at gold as stable purchasing power, which it has been for thousands of years. For example, a good suit for a man, like a Roman toga 2,000 years ago, would cost about 1 ounce of gold. Today, a good suit for a man will also cost 1 ounce of gold. So consequently, gold is just stable purchasing power. In a period of fiat money and therefore declining value of the dollar in your pocket or the pound in your pocket, gold goes up. And that's why you want to protect your assets with gold, with real money, with nature's money. As I have been saying for many years, remember that we have actually recommended for investors to hold gold for wealth preservation purposes for over 25 years. And that is insurance for yourself and for your family and potentially for future generations. But gold in itself doesn't give happiness. And you should put your house in order, buy your gold, store it in the safe place outside the system, but then enjoy life, because life is not worrying about money. But if you don't have money, you'll worry. So you first put your house in order and thereafter you enjoy all the free things in life which cost nothing. Friends, family, nature, books, music. There are so many wonderful things, and that's what life is all about. And therefore you shouldn't focus on money, you should focus on all the other things you could do in your life. And also remember that, especially in the difficult times we will have in the next few years, helping friends and helping family is more important than anything else. Many people believe that Bitcoin is an alternative, or cryptocurrencies are an alternative to gold. In our view, that is not the case. You cannot beat money that has existed for thousands of years with some electronic money on a memory stick or in a computer that in itself has no intrinsic value. In our view, Bitcoin could certainly go to $1 million, but it could also go to zero. And that's a risk that you don't want to take for wealth preservation. Bitcoin might work as a payment system, might work as a speculative investment, but it doesn't work as a wealth preservation asset. So therefore, do not hold cryptocurrencies for wealth preservation. Hold gold or some silver that you actually have possession of yourself in a safe vault, in a safe jurisdiction. That you will not achieve electronic money. Thus, gold is the only real wealth preservation asset there is. We must remember that only physical gold under your own control is real wealth preservation. ETFs, paper gold, gold funds, etc. do not work in a period of crisis. If we get a crisis in the financial system, which I expect and have been forecasting for quite a long time, and that crash is still to come, we get that crisis, most of your assets within the financial system will either fall dramatically or disappear. Therefore, it is important that you actually have a physical asset in the form of gold and some silver, and that you hold it outside the banking system. Don't hold paper gold. Don't hold electronic gold. Don't own tokenized gold. Tokenized gold is good, again, as a short-term investment, but it's not the right instrument to hold for wealth preservation purposes, because all you have is, again, a digital entry, potentially backed by real gold, but you want the real gold yourself that you have possession of. So therefore, remember, hold real gold, hold real silver, and control it yourself in the safest vault that you can find. 25 years ago, when we started investing in gold, gold was then around $300, and we were quite extreme at the time. We said to them they should hold up to 50% in physical gold. Now, some people that listened to our advice did that, but most people don't feel comfortable with putting 50% of their assets in gold. We do, because we think there's going to be problems in the system, but everyone should have a percentage of gold to protect their wealth as insurance. Now, I think the minimum today, if you don't go to the extreme of 50%. We have actually clients today who have virtually 100% of their assets in gold. And of course, in the last 25 years, they've done very well. But if you don't feel comfortable with 50% or more, you must at least hold a percentage which is high enough that you can fall back on that gold if other things go wrong within the system. So we would say the minimum is 10%, but I would say the minimum is really 20-25%. And then you have to decide if you feel comfortable going higher. The way we see gold today and what's going to happen to the financial system and to the massive increase in investment in physical gold through central banks, through the BRICS countries, and also ordinary investors, we believe that gold will go up by multiples from here. But remember, you're not buying gold for massive price appreciation. You're buying it for wealth preservation. Therefore, hold enough gold that you feel protected against problems in the system, which I think are inevitable. Since we started with investing in gold 25 years ago for wealth preservation purposes, we recommended fairly high percentage, up to 50%, maybe from 20 to 50% in gold already 25 years ago. We think that's the percentage you should also invest today. Another wealth preservation asset and a real asset is silver. Today, silver is massively undervalued in relation to gold. Gold-silver ratio is now at such a high level, which means that silver is likely to move faster than gold in the next few years, and that could be twice as fast, 3 times as fast. And therefore, we've seen $50 gold in 1980, and we saw $50 gold in 2011. And between these periods, it's been down to virtually $10, and it's still under $40 today. We believe that this time that's going to happen fairly quickly. Silver will move $50, not stop there for very long, but move on from there. So we think it's a real opportunity to acquire silver for wealth preservation purposes today. Silver is more volatile, so we recommend that investors hold 20 to 30% 30% of silver today, which is more than the average we have recommended over the years. But today we think it's a real opportunity. So you can comfortably hold up to 30% in silver because you're going to see major acceleration in the silver price in the next few months and years.